I think the lesson for me anyway is just to trust the charts and try not to get too caught up in the various fundamental occurrences and developments. And the charts were pretty clear on how this one played out. I know hindsight's a wonderful thing. Everything's always very clear in hindsight, but yeah, I mean, there were very clear signs that things weren't right, I guess, with not just the iron ore trends, but also the trends for our big miners, BHP, Rio and Fortescue. Chart on screen is just showing the Singapore-based US dollar price. There's also a Shanghai-based price in yuan per tonne, and that does tend to lead this one. This one tends to follow, but this is probably the one that most viewers are familiar with because it's priced in US dollars. And all trends inevitably change in the same fashion, and they do have to show up on my charts without fail, because my charts are measuring price action, they're measuring short-term and long-term trends. And trend change always starts with the price action. So we go from this phase of higher peaks and higher troughs. You get higher peaks because there's more demand in the system, and you're getting, less supply in the system. That's why we get higher peaks. We're getting higher troughs because there's more demand in the system, and that's a healthy bull market phase. When we move into that sort of equilibrium phase where prices start to stagnate, and that's in that sort of June, July, August area, where some supply is coming in just to equate that demand, we go sideways, and then if supply does pop up and demand can't soak that up, we do move into that downtrend phase. So we go lower peaks, lower troughs. You can see that point there, sort of just late July, where I've marked 216, and then we just break through those short-term trends, that light green zone, which you can see kind of supports prices on the way up. And then the key becomes not so much the break, but how you respond to that break. Do you quickly get back above it? And that's okay, that's fine. Or does what was previously support, does it become resistance? And that's kind of the key. That's kind of, probably could have drawn a big circle around there. That's where that short-term trend zone goes from green to orange to pink. And that's your first big sign. But, again, it depends on whether you're a short-term trader or you're a long-term holder. And the long-term holders get different signs as well. So they're looking at the long-term trend zone. But the same thing happened there. It went from support to resistance, and then it's a slippery slope. So I guess viewers can just sort of look at these charts and use these as a template for picking that next reversal.
Yeah, in this instance, is it worth zooming out then, having a look at a weekly chart to kind of get perspective in terms of where things might go from here?
Yeah, look, it's always very sensible to look at those weekly charts, because you start to pick out some of those key support and resistance levels you might not see on that daily chart because you just zoomed in too much. So a couple of things that are obvious here. I think the first one is just how fast that move was. So I think it's about 8 out of 9 weeks down. I think we ended up last week was 9 out of 10. So it happened very quickly. So that does make it hard for a trend follower like me, because you kind of have to back the trend. And when it changes slowly, that's easier to predict what's going to happen. But when it goes this quickly, it does make it difficult. So you didn't get those same signs of on the weekly chart, at least, of the slow breakdown, the ebb and the flow, and then the rejection and the turn. So this was a very quick one, but it does give us the key level there at 75. So if we look to the downside, 75 is the key major support level. There's some major lows there from 2020, both pre and post-COVID. And I wouldn't think we're going to get below those. The question is whether we get to those and how much damage that's going to do to our big three miners. And look, I'm optimistic when I look at the charts of those specific stocks and where they sit now in relation to their long-term trends, that we can see a bounce from here. But looking at the iron ore chart, because it's sliced straight through that long-term trend zone, that's the dark green zone, that makes me a little bit more concerned. If I'm honest, nobody thought it was going to stay at 230. I mean, not a single person in the industry, or that I saw come on ausbiz, told viewers it was going to stay up there. Most of us thought it was going to come down towards 100. I was a little bit more bullish. If we look at that chart, sort of 130 to 110 was that key zone. It's the long-term trend zone. There's a couple of key static levels there, and that's what I was pegging. But I'm completely wrong on that, and history has shown me to be wrong. That level didn't hold, and that's a technical analyst reality. Often levels don't hold. Let's look at the charts of the iron ore miners, because the iron ore price is a little bit tougher to pick right now.